Good morning, guys, from wherever you're watching us from. My name is Kefa Eric, your market analyst at HFM, your number one broker in Kenya and beyond. I hope all of you had a fabulous weekend. This is going to be a pre recorded YouTube video. Kindly visit the HFM YouTube channel, like and subscribe, and click on the notification button so that you are not left out in educative content that we update from time to time. And now, moving on swiftly, let's see what has been happening from an economic data point of view. Just a minute, let me share my screen. From an economic data point of view, from Friday. On Friday, which was the 1st of November, we had quite a number of news which came out which affected market direction. Beginning with news from Europe, particularly the country of Greece, which we had the global manufacturing PMI, which came out flat, slightly above the expected. We see the expected was at 50.2, and the actual, which came out, was 51.2, coming a little bit positive. Moving down to the Great British Pound based news, which was the NSP Global Manufacturing PMI, quite the same from the data released from Greece, which also came out at 49.9, slightly below what was expected at 50.3. We could term those as slightly positive, giving power to those particular assets. Moving on to the much anticipated news, which was the NFP, non-farmers payroll. Here we saw something quite unique that has not been seen for quite a number of months. This is the lowest data that we have seen for quite a number of months. Some would argue years, where we had the NFP data coming out of 12K. This is extremely low. You could go and compare from previous data, meaning that only 12,000 people were employed in the United States. This was quite unprecedented. But nevertheless, moving on swiftly, we also saw unemployment rate coming out flat. It was anticipated to be at 4.1%. It came out at 4.1%. So there we see the two economic data battling out, which does not necessarily mean impulsive move in one direction. Because yes, we have few people getting employed, and at the same time we have the unemployment rate remaining steady. We could work with that. Moving on swiftly, we had the Canadian S&P Global Manufacturing PMI, which came out positive, slightly positive. It was anticipated at 50.5. It came out at 51.1. So plus 1.0 point something percent. Good for the Canadian dollar there. But the significance is quite minute. We also add the S&P Global Manufacturing PMI, which came out at 48.5. It was anticipated at 47.8, slightly positive. The ISM Manufacturing PMI also coming out slightly negative. So in general, we can say on Friday it was packed with heavy news, but what we experienced was mixed reaction, which would mean neither here or there. That would translate to the financial markets price movement in a short while that we are going to uh, talk about. Remember, guys, this week we have got tomorrow, in fact, which is the 5th of November 2024, we have got the US election. This is going to have high volatility standards that have not been experienced. This is due to the uncertainty in the financial market in correlation with the US dollar. Now, investors, in short, investors don't like uncertainty. And when there is election, there is uncertainty. When there is war, there is uncertainty. When there are pandemics, there is uncertainty. In this instance, there is election, there is uncertainty. So that would have effects on the US dollar that we are going to see, and also on stocks and bonds, and of course on the precious metals in the category of commodities. Now, moving on swiftly, let's go and translate that on the chart. Very nice. So, translating that on the charts, beginning with our usual suspects, major currencies, precious metal, and of course the much requested cross pair GJ, Great British Pound JPY. So from Euro USD, you would notice that it is a pair that has the USD coming in second, or in short, it is a USD quote currency. So we would see price moving in a quite fashion criteria. Right here we see a short retracement to the upside, but remember, guys, right now there are indications that the US dollar might be weakening, so we would like to see it come and close above the 109 to 67 mark for it to give us a move to the upside. This is on the daily time frame. On the lower time frames, would like to see price print much more higher highs and higher lows, indicating price expectations in relevance to this. The chart is not on the screen. Thank you for that. Let me share that in a jiffy. That's very important. Thanks for sharing that. What about now? Can you see the charts? Kindly share the charts. Thanks, Vicky and Tina. Can you see the charts now so that we proceed? Just comment yes. Nice. Agnes can see it. Two more. Vicky can see it. Nice. So we could proceed. As I was saying, due to the weakening of the US dollar and the uncertainty because of the US election. And remember, our guys, also on Thursday, we're expecting the FOMC, Federal Open Market Committee, to come out and articulate monetary policy, which will is highly anticipated to be an interest rate cut because the US economy has started dwindling. And the FOMC, or the Central Bank of the United States, do not like that particular scenario. They like to put the interest rates around 2%, giving a balance of the health of the United States economy. So with those two major events, we will see the US dollar weakening a little bit drastically moving into the week. So for US dollar quote currencies, we would see it print price high, printing price suggesting a movement of price to the upside or a bullish trend. For confirmation buyers, would like it to see close above key levels, like on the Euro USD, the 1.09 137, for it to confirm buyers movement to the upside. Remember, guys, to buy at to sell at premium and buy at discount, and at this instance it would be safe to be looking for market execution in line with the economic happenings. Remember, economic happenings, also fundamental analysis gives us direction of the market. Then we have technicals for entries and exit. Moving on swiftly to GU. In GU, we see it moving in a similar fashion because of the US dollar slightly weakening, printing price to the upside. I see guys are requesting much to have this session recorded from your end. I'm sure you don't need that. You could just go to HFM YouTube channel at HFM Kenya and like, subscribe, and click on the notification button so that you could see this video repeat itself times without numbers, for you to get an idea and understanding of this particular segment. Now, like I was saying, the GU are also moving in a similar fashion due to the weakening of the US dollar. And why is the US dollar weakening? First, on Friday, we see weak NFP news ever recorded throughout this year, coming at only 12,000 new jobs, and with the US election coming tomorrow, we also see we also see a weakening dollar due to the uncertainties, and also the anticipated FOMC data. All this is informing us a weakening dollar. So what we'll be doing, it's safe to be looking for market executions which are in relation to this particular happenings. The AUD USD, or the AUXI if you might like to call it, also behaving in a similar fashion. So due to the US dollar weakening, we see that price is printing even much more higher. But here we have a unique scenario. We would like to see this particular low that has formed here come and take out this particular high to confirm our bias to the upside, right? To confirm the weakening of the dollar and the slightly strengthening AUD due to the same. For USD base currency, so the USD having pairs with the USD coming in fast, we see it moving in an opposite direction. We see it moving in, creating lower lows and higher lows. Why? Clearly seen from a lower time frame, maybe the 4-hour. Why? Because of the weakening of the US dollar. Remember, guys, we like to look at all economic news or fundamental news, high impact from these global economic powerhouses, but we take a close look to what is happening in the United States, because the United States dominance in the global economy should be taken with much more seriousness because of the USD being the reserve currency of the world. In short, when the USA sneezes, the entire world catches the cold, to signify the power of this particular dollar. I see somebody, Tamira, saying the DXY is not changing. Yes, the DXY is not changing. You could say that it is consolidating, not really changing. There must be price changing. There could be insignificant, but due to the stagnation and the uncertainties which are happening, but we shall see this changing, moving into the week. Okay, moving on swiftly for USD JPY. This particular asset has been moving in an upward or a bullish trajectory for quite some time now, but we see a little bit of changes again due to what? US dollar weakening. Your guess is as good as mine. Would like to see it give us a little bit confirmation on lower time frames, breaking lower lows and closing below lower lows for it to confirm movement of bias to the downside. Remember, guys, we use technical levels for entries and exit, and we repeat this every time we see a trading opportunity, so that it can produce consistency for us to profit from the financial markets. The USD card opening with a gap to the downside, confirming the US dollar weakening conditions. Would like to see price come in close below this lower low that was created right here to confirm bias of movement to the upside, but right now we see price is retracing to premium levels for it to give us a much more safer entry with a profitable risk to reward. So guys, today have so many questions. My first time here. Welcome, Geoffrey. McLean says, for the Euro USD, is it bullish right now? Okay, McLean, I think you joined a little bit late. I'll repeat. For US dollar quote currency, so the US dollar coming in second, due to the weakening of the US dollar, what we would likely to see, we would likely to see it moving in an upward trajectory. Remember, we use fundamentals for direction and technicals for entry. By technicals, I mean areas of interest, be it support resistance, demand supply, and the likes. So for gold, on Friday gave us quite a unique of, this is DJ, sorry, come to gold. On Friday gave us quite a deep, bearish movement of price to the downside. Why was this? The weakening US dollar based on the NFP numbers which came out. Now, remember, to understand gold, you must understand it from an economic data point of view. And number two, you must understand it from a geopolitical events point of view. If you learn to marry these two with time, gold should be an asset for you to look forward to be trading. Remember, guys, to trade with the trend, to trade with proper risk management. And before we close today's segment, we will take a look at GJ. The Great British Pound JPY has also been in an upward trajectory, but from Friday we see it moving in a bearish trajectory, and from this, and now we see it printing price higher in suggesting a bullish trend. Would like to see it come in close above recent lows for it to confirm movement of price to the upside. Remember, guys, when you wait for price action to print on areas of interest, it is much more conducive for you to get proper risk to reward ratios. Here I see a key level, rather than you just entering any time of the market, right? Remember, guys, as a disclaimer, remember to observe risk management, because this is not financial advice. We are getting to analyze the market together to possibly see potential entries for us to maximize on this and get a profit out of it. Okay. All right, so guys, I think we're done for today. I would like to remind you to trade with a regulated broker. HFM is a regulated broker. I would also like to remind you to observe risk management, and see you tomorrow, the same place, the same time, during US election, to do things the same way that has shown us consistency over time. Until then, keep safe, take care, and God bless. Thank you.